Thank you for joining us and welcome to the McBride Group's monthly market update. Please like and subscribe to stay informed on the state of the market. The stock market shook off October's downturn and set a number of record highs in November. The S&P 500 was up 5.7% in November, its best month for the year, and the S&P 500 and NASDAQ are both up over 20% so far this year. Little wonder that investors poured $141 billion into U.S. equities, the heaviest inflow for a 4-week period on record, and for good reason. Our economy continues to grow, and the stock market is anticipating future Fed rate cuts. The optimism regarding our economy is in direct contrast to the rest of the world. European stock markets are on their way to their worst year relative to the U.S. since 1976. China, the world's second largest economy, continues to struggle. Tariff threats on Chinese goods could negatively impact Chinese exports. China already faces greater trade barriers from the European Union. India's economy expanded by just 5.4% in the quarter ending in September, well below estimates by economists and close to a 2-year low. Wars continue to put pressure on the world's economies. In Ukraine, President Zelensky has shown an openness to ending hostilities with Russia if their non-occupied territories are guaranteed by NATO from further Russian aggression. In the Middle East, a ceasefire is in place between Hezbollah and Israel following a year-long conflict. We think the ceasefire further isolates Hamas and could hasten its demise in Gaza. Finally, the stock market is looking favorably on selection for Treasury Secretary. Scott Bessent is a successful hedge fund manager with a reputation for having an underlying understanding of the financial markets and our economy. Underlying his positive press is the assumption that Mr. Bessent will temper enthusiasm for tariffs. We shall see. Thank you for joining us. We hope to see you next month.